Imagine getting a $50,000 to $60,000 line of credit to grow your business with only a 600 personal FICO score and a soft credit pull. That's a reality for small businesses that get funded by ROK Financial.
Is our average loan size is probably only like 55, 65 grand on any given month.
And how ROK Financial can get your business multiple funding approvals so you're spoiled for choice.
We might end up with 2, 3, 4, 5 different approvals. We're able to get you funded as quickly as the same day.
He shocked me with how many businesses they're funding on a monthly basis.
We're helping hundreds of business owners, thousands of business owners a month gain access to capital. Only the business owner knows how dangerous they can be with an extra 50 or 100K.
He also mentioned that you don't even need good personal credit because you can easily get funded without the lender even checking your personal credit score.
There's certain lenders on our platform that, just like you said, no personal guarantee, no credit check. What they're doing is they're leveraging your business and they're looking at your business. They might look at your business credit, but they're not going to look at your personal credit. They're not going to tie to your personal credit.
Then I learned the worst industry you might want to avoid right now if you want to stay off the bank's blacklist.
The two biggest industries that we're seeing traditional banks and lenders limit the most right now are like general contracting, construction, right? Construction is a big one, and trucking and transportation. Those are also our two biggest industries in terms of the amount of business that we fund.
So if construction and trucking are the worst industries, then what's the best industry?
The preferred industries that we work with that are getting home run approvals these days, right? I'm talking about terms that are above and beyond what anybody else is getting access to, are definitely at the top, or like.
So Tony, who is ROK Financial? Who do you help and how do you help them?
Great question, Cal, and definitely appreciate you asking. As far as who ROK Financial is, we fill a really unique niche within the marketplace. And what that is, when you talk about small business lending in 2024, the one thing you're going to get is a lot of information, right? So how do you simplify that? Well, you should probably align yourself with professionals within the industry. Right. And that's kind of the unique niche that we fill today, is an information gap for small business owners. And the way that we do that is as a commercial financing broker. So what that means is we work with multiple banks and lenders and offer all of their products and services as an extension of our own. And with that being said, what you should understand is there's a multitude of products that are out there, and there's certainly hundreds of lenders that are out there these days. A lot of people will give you money. A lot of times it's going to be high cost, especially these days where rates are where they are, right? That's fine. But how do you know that that's still the best offer for you when it comes to rates and terms and how much money you're gaining access to, and really just the structure of the program, right? So there's a lot of different ways you can borrow money. And to be honest, the biggest thing, if I'm giving it to you straight, is making sure that you're not using the funds the wrong way. And what I mean by that is, a very small example might be buying a piece of equipment or a truck or trailer within your business. A lot of times people will go take a term loan or a line of credit and then go buy a piece of equipment within their business. Now, there's nothing wrong with that, but what that does is potentially take away from future cash that you could access in your business, right? Whereas if you were to look at specifically an equipment finance or an equipment lease type of product, you would benefit from being able to have that one asset, right? That one a piece of equipment specifically with its own note tied to it, right? And what I mean by note is its own loan or lease tied to that specific piece of equipment. And what that does is, in the future, when you are looking for cash in your business in the form of a term loan or line of credit, those banks and lenders that offer those products are not going to look at that debt that you owe on a specific piece of equipment as what they call competitor or similar debt. Right? That's siloed to the side. So basically what that does is it makes you look like a fresh borrower with no loans, right? And the idea here is you really want to structure your capital stack. That's what they call it, your capital stack, so that you're taking the best advantage of the products that are available at the time that they're available to you within your business, right? Businesses are cyclical, but there's also a life cycle, right? They have to go through that growth mode to achieve where they're meant to be within the market, right? right? And throughout those processes of you starting the business, going through growth mode, and ultimately ending up where you're going to be within your market, there's different products that you can use to align yourself to get there. And that's the service that we provide, is being able to understand your business, its unique needs, in terms of your industry, your geography, or where you're located, or even your customer base, right? What type of customers do you work with? Are you working with really large corporations, the Amazons and Walmarts, and some of the larger retailers and providers out there? Or are you working with other small mom and pop businesses, right? Are you a printing shop that's doing printing for other local businesses in your community, whether it's t-shirts or flyers or signs, right? Or you're working with the local consumer, right? You're a pizza place, right? And people are walking in, right? We help those people understand finance, right? And that's the niche that we try to service. And to be honest, what's cool about it is it's constantly changing, and that's probably the best advantage there.
By the way, you can apply for business funding with ROK Financial by clicking the link below this video, heading over to the ROK Financial sign up page. All you have to fill out is about 10 boxes of personal business info, really simple stuff, and then click apply now. That's all you got to do. So what are all the funding products that ROK Financial offers?
Great question, Cal. And as far as the products that we offer, it's really what the market has to offer today, right? And it's kind of a moving target. What I mean by that is banks and lenders are constantly taking a look at where are they projecting lending to go, where are they projecting rates to go, where are they projecting consumer, consumer advocacy and the ability to continue to grow, right? So what they've done recently is you've seen a lot of technology pour into our industry. And by technology pouring into lending, it's allowed for us to offer a much more wide variety of products. So like where in the past we might have just been able to get you cash for your business, right now we're offering a ton of different products. So starting at the top of kind of like what we would call our waterfall, or even like the lending pyramid, basically what's available outside of the bank is at the very top, you're talking SBA loans, right? And SBA loans there's a few different products inside of the SBA, but basically that's a government backed program that allow banks and lenders to have a government guarantee on the performance of their loan. Right. So basically that guarantee is anywhere between 70, sometimes it's 90%. It depends on exactly what the rule is for the SBA. But basically you can look at it like this, right? If the bank was to give you $1 million and you were to default, they'd really only be on the hook for a few $100,000 because the government would actually cover a substantial portion of that loan. Now, knowing that, you do have to jump through the hoops of the SBA and the banks or the lenders, right? So it's a much more difficult product to get access to. You need a lot more documentation. You certainly need to understand your business and how you're applying the funding, because that's what's going to decipher what type of SBA loan you should apply for, and if it's even an SBA use of funds that you can align with. But outside of the SBA, there's also a variety of options that compete right there with the banks. And that's more along the lines of what we would call ABL, or asset-based lending. And this is very similar to your traditional bank lenders. And why? It's because, again, that word asset, right? If you go to your local bank, they're going to want what's called a blanket lien. That means if the business owns something, they want you to pledge it when borrowing money from the bank. That's just how they overprotect themselves against the risk of a small business loan or line, right? Now, external to the bank or these alternative lenders, what they'll do is they'll pick one asset class, right? So for example, your equipment is an asset class, your receivables are an asset class, your revenue is an asset class, or your real estate are all asset classes that your alternative lenders will look at and say, okay, it's worth X, we'll give you Y. Sometimes it's in the form of a one-off transaction where, hey, you have, $100,000 in receivables. We'll give you a one-off transaction based on those receivables. Other times they're able to set up a line of credit based on the performance of these things over time, right? So there are a lot of different products that are available. And it starts right outside of the bank with those couple of products there. There's even some commercial real estate products like multifamily investment properties, any type of residential investment, from fix and flips, buy and hold, basically anything that's not your primary residence, we can assist you with. We'll also do some like cash out refis and stuff like that on commercial properties themselves. That you can do through the SBA or through one of these other lenders that are out there that are doing those types of deals. And that's probably what we would call the secured side of the business, right? What I mean by secured is they're actually going to make you pledge an asset. Actually, sorry, I missed one. The equipment financing is one more category. Equipment financing and leasing. I know I gave an example of that, but the equipment financing and leasing is probably the last part of that side of things. Then you have on the flip side of the coin what's called unsecured lending. And this is where they're strictly looking at the cash flow within your business and determining how much money and what type of product makes the most sense, right? I always say dollars make sense, right? And what I mean by that is they're going to look at how much money you can afford, and that's how much money they'll give you access to, right? The lenders need to know that they're going to get paid back. That's how they run their business, right? And I know that may sound funny, but that's the actual truth, right? When it comes to these different products, it's really going to be based on then what you're using the money for, right? And if you have a flexible use of the money, what I mean by that is maybe there's a cycle within your business where every few months you have a lull of cash flow because, hey, I'm kind of between projects. I'm finishing one, starting another, haven't gotten paid over here and need to start getting paid over here. That's a home run line of credit type of borrower there, right? Because they're able to take the funds and put them back and keep their cost of capital very low because they're able to pay into that very quickly and pay off the note. Now, if you're on the flip side of that, where you just need access to funding and you want the cheapest payment, well, that's going to be more on like a term loan or working capital loan where they can stretch your payments out over a longer period of time. And that will in turn bring your payment number down, right? So I always say if you're somebody that's looking to leverage ongoing use of capital, that's where you would look more at the line of credit. If you feel like, hey, I'm just kind of weathering a storm or taking advantage of an opportunity, that's probably more of like that term loan or even the working capital loan type of product. And the beauty of it is we're going to ask you all these questions. Right. So you don't need to know all the products. You don't need to know all their requirements. We're going to do a brief, quick, 10, 15-minute interview with you. It might feel like 21 questions because we're certainly going to ask a lot of them. But what that does is it allows us to position you and your business best for underwriting. Right. And what I mean by that is we are here to tell your story. Right. We're going to use the paperwork and the documents that we collect to validate that story. But what we need to do is understand your business and understand your goals and understand where you're taking things. And then we use that to go help you find access to the funding.
You spoke about capital stack and lending pyramid. And I just want to know, how much does ROK Financial kind of act as a consultant with these small business owners?
What a great question, Cal. And I'm so glad you used that term consultant because we actually pride ourselves in the consultative approach that we take. We believe that financing and money is not an if, it's more of a when. And when you think of financing, think of ROK. No, I'm just kidding. It's more along the lines of you do need that guidance because at the end of the day, this is a moving target. In 6 months, the products and the requirements are going to be different. And that's what our job is. We have 5,000+ business owners that apply with us a month. And that data gives us the ability to share it back with these business owners. So if you're in a specific industry or a specific area, you may feel like, hey, you guys might not know my business. Well, I can tell you that nowhere is really hiding when it comes to today's society, right? If you take a look at our funded clients and you put a population map right on top of it, it's literally the same thing. So if you're in a small area, I promise you we've lent to businesses there. If you're in a very large metro area, we're probably lending to hundreds of businesses in your backyard. But what I'm getting at is we have the data that tells us where to go, what to do, especially with the specific different types of opportunities that are out there. And then we use that plus what all the lenders are telling us with their current temperatures, right? Because you might not really understand, and not you specifically, but the business owners listening to this, you might not understand it, but like lenders will do things that they won't normally do, right? That's how they get into new markets or offer new products. They test, right? And they don't tell you when they're testing or what they're doing, right? If they're a 600 minimum credit score, a lender, or let's say a 650 minimum credit score, they might drop that down to 640 or 590 and not tell you. So the best thing that you can do is always have a little bit of wiggle room, because at the end of the day, in alternative finance, right, outside of the bank, our job is to lend the money. So our banks and lenders are looking for reasons to give you the capital. And the real reason that they're looking to give you the capital is because you can afford it. So once you check that affordability box for them, they might get a little, a little bit flexible on their own guidelines. And again, it could be that they're testing something. It could be that they like your business. It could be that they like where you are. It could be that they like your customers. It really, they're never going to tell you what it is. What they do is they just want to know the whole picture, because that allows them to know, do they fit? Right. And if they can fit, well, then they're going to do what they can to earn your business. And that's what's unique about this this marketplace that we do have, is right now, if I'm being honest, Cal, it is a lender's market. And what I mean by that is you have a group of business owners, and I don't want to call them like the top tier, but that's certainly what I'm describing. Is you have these group of business owners that have taken major advantage of the last 4 to 5 years, right? They've taken major advantage of businesses going out of business, being able to add on automation and AI into their processes. They've taken on market share. They've streamlined processes, right? And they're really rocking and rolling, as we would call it. And we see a lot of these businesses applying with us today, and they're doing great things with the capital that they have access to. They're taking advantage of purchasing other businesses and getting into more inventory, or doing marketing campaigns, or hiring employees, right? And then you have the complete opposite end of the spectrum. You have the business owners that, if they were a consumer, they live in paycheck to paycheck. And this is a big bulk of the businesses that are applying right now. They have a loan or 2 loans in the business already. Their credit is not great because they've leveraged that for the past couple of years trying to weather this storm, right? So in those moments and in that type of understanding, what you have to do is take away the variables, right? And the ultimate variable for a lender is affordability, right? And now you might be sitting on the other end of this video saying, well, of course, lenders want to give people to the, money to the people who can afford it. But it's bigger than that. What it really comes down to is they want to know that you're not biting off more than you can chew. And what I mean by that is they'd rather give you access to maybe 75% or 50% of what they would give you 2-3 years ago, based on where your business was versus where it is, right? They might give you a shorter term because they just feel it's a little bit more risky. So by them getting paid back a little bit faster, it mitigates their risk, right? But once you have an approval, and this is kind of like the key point here, is once you've been approved, it flips. And I know I told you it was a lender's market before, but it becomes the borrower's market once they have those approvals in their hand. Because at the end of the day, again, these lenders need to lend the money to make the money. And if they're not lending it, well, then they're not actually meeting their own quotas, and it affects their own business, right? So they're still trying to get this money out on the street. And if you are a smart, a savvy business owner, you can leverage, maybe a couple of options, right? Like, this is what we do when you have a borrower that applies with us. We apply with the best, like 3 to 5 lenders that are going to fit their need and what their profile is, right? We might end up with 2, 3, 4, 5 different approvals. those approvals can vary in rates and terms and dollar amounts. And the way that we present all that back to a borrower is actually just in one slider calculator feature, where you basically go in and can play around with, hey, I'm approved for this much money up on this much term, and if I did that, it's going to cost me this much per payment, right? And that allows you to understand, okay, can I afford this? Can I use this? Right? And how much do I actually need? Right? And that's what's interesting, is when you stop asking somebody, hey, I have 50,000 for you on 12 months. Do you want it? Yes or no? When you start asking them, hey, how much do you need? You're approved up to $75,000, up to 18 months, right? And let them kind of play with it. What we've noticed is a lot of times the business owners, they're not taking that full 75,000 on the upfront, because even them, their confidence might not be there to fully be able to handle that. So it's definitely a little conservative on both sides at the moment in terms of the lenders and the borrowers, or the business owners. But at the same time, this is why it's so important to really understand what your full picture is and what really is available to you, because there's a lot of different products out there, and you never know which one's going to fit, or which lender is going to make the most sense until you pop the hood and actually, do some diagnostics.
I find that when I talk to business owners, one of the biggest problems is that they don't know the first step. They don't know the next step to take. And what I think about ROK Financial is it's a done for you service. Is that right?
Absolutely. And we actually have like talked about that internally, right? And promoting a done for you kind of service. And service is probably the best keyword in that statement, to be honest, because that's what we actually are. Is we're a service based organization. We service our customers, right? The business owners that we work with, and we service our lenders, right? Our banks and lenders that we work with are the lifeline to what we offer. So if we don't provide stellar service in communication with our lenders and in following up with the approvals and their, and their pipelines, like, they're not going to want to do the same type of business with us as they do. In turn, that then affects the quality of business we're able to offer to our customers. So we take those things extremely seriously, and have dotted every I and crossed every T for the last 15 plus years in those categories. I mean, if you take a look at our reviews and reputation, you'll understand that why most financial services companies can't get over, a 3.2 or a 3.3 rating when you talk about like their Google or Trustpilot reviews. And then there's ROK, who has a 5.0. Right? How does that happen? Well, it's because of that service. It's because we're not here to sell you something you don't need. We would rather show you, hey, this is what's available. Can you use it or not? And if not, it doesn't cost you anything to apply with us. A lot of times it's just simply completing a little bit of documentation, maybe forwarding over an email or uploading, some bank statements to our server. And that's really it. Now you're kind of hearing back and you're in the driver's seat. Right. If you decide that, hey, when I get that calculator, I want to move that, I want to take that $200,000 offer, or that, $500,000 or $50,000, whatever it is. Right. That's up to you. And it's going to prompt you to take the next steps. It's going to tell you what you need to do to get access to that. It's not really us. Like I said, it's really just outlining that service or that process for you, so that you can go in and actually get access to the funding. We pride ourselves on, I mean, I guess it's closing percentage, right? But it's more funding, right? Because there's so many deals that get approved, and lenders that brag about their approval rating or pre-approvals that they give. And those numbers are BS. Until you're putting money into the local economies and into the local business owners' pockets, don't brag about it. For us, we know we're going to lend, upwards of $250 million a year, potentially $300 million plus a year. And that's just where we lie. 20-30 million dollars a month is what we do.
Okay, that was going to be my next question. You already answered it.
Yeah. So, and just to kind of piggyback on it, what's interesting about it is our average loan size is probably only like 55, 65 grand on any given month. So like if you were to look at, what $30 million divided by 50K is, you can tell me how many deals we're doing. We're helping hundreds of business owners to thousands of business owners a month gain access to capital. And I think that's what makes us unique. You'll get some people to throw some big numbers around, but they're doing deals that are mostly 500K plus, right? You talk about some realtors that might say, oh, I did $10 million in deals. Your average house is 300-400 grand. It's you did 30 deals in a year. We're doing 300 in a month. We're not playing the same game. We're what's called a wholesale broker. Which means we get wholesale pricing, and we're working with our lenders in bulk, essentially, right? We're providing them with data and analytics and insights into, like I said before, upwards of 5,000 plus applications a month. And just like we're sharing that information with borrowers on how they can take advantage of it, we turn around and share the same thing with our lenders, because again, they're our lifeline. So the more we can tell them about the people that are borrowing money and what they're asking for, and outline that for them, well, then they can go design their products to meet your needs. And that's the happy medium that we've kind of reached here. Is we do a really great job of keeping everybody well informed, and use that to take advantage of what is available.
What is the maximum amount that, in funding that a small business owner could borrow?
That's a great question. Each product is a little different. If you're specifically, and I'll give you two categories, right? The secured and unsecured side, or the collateralized versus non-collateral. As far as you not needing to tie any assets to a deal, typically you're looking at a max of like 2, 3, maybe $5 million. If you have a business that's been around a bunch of locations, extremely large small business, they might get access to upwards of like $10 million unsecured, right? That's the absolute limit on the unsecured side. As far as like a secured loan, those really range, man. We were looking at a deal. It's not just looking at. We're in the process of funding a deal where it's actually what they call like funding in tranches, or basically different stages of the deal. So this is they're basically going to build a full development with retail shops, affordable housing, a whole, like, I forget exactly how many acres it is, but it's like a couple thousand acres of development that has to happen. Basically, I think it's going to end up being over 110 million all in. But basically, this first round of funding that we're giving them is 2.5 million, and that's literally just so that they can do the surveys, get all the permits, and literally get to the point where they can break ground. And then once they break ground actually and have their machinery there and things are getting set up, then they get their first round of funding that basically gets, the ground where it needs to be, right? Sets up all the foundations, this, that, and then they release another round of funding and another round of funding, and it just keeps the project moving along. So again, something like that could be upwards of $100+ million. But like the core, like, of our business, I would say it caps out around $20-25 million. That's where we're going to do pretty much all of our deals. Every once in a while, there'll be a deal like the one I was just describing, where we might be able to get involved and really provide some unique help just because of the relationships that we have. But those deals are much more few and far between. Our bread and butter, again, is really helping small business owners gain access to working capital solutions where they can buy inventory, purchase do some marketing, hire some employees, potentially buy out a partner, or buy another business, right? Or solve challenges, right? Hey, I have this problem. I have, my oven went in my restaurant. My truck's down on, one of my 15 trucks is out. Like, I'm a tow company, whatever it is. I'm somebody that my lift broke in my auto repair shop. These are all of the types of deals that we do. And I think the reason that we fill such a unique gap, Cal, is because of how quickly we move. Right. And I think that this is a big thing, is we're able to get you funded as quickly as the same day. And that is a unique option and resource for a small business owner who knows how dangerous they can be with extra cash in their pocket, right? I once heard it said by one of our lenders, only the business owner knows how dangerous they can be with an extra 50 or 100K. And, I never really thought about it like that, because you know, I come from humble beginnings, right? And they always say your belief about money is what you learned in your childhood, right? So I come from humble beginnings, and I had a tendency of thinking, hey, I don't think they're going to take that deal, right? That looks expensive. There's no way they're going to take that. And I had to learn the hard way that of course they are. They're much better with money than I am. They're actually much more savvy and know how to use the capital, right? So like I was told, don't put your brain in their wallet. And really just give your customer the information, right? And let them utilize the capital the way that they see fit. And I think that's what makes us super duper unique. Is again, we're not gonna look to do anything that isn't going to be of benefit to you and your business.
Okay, so I want to talk about minimum requirements like cash flow, credit, um, you know, time in business. That's a big deal for new business owners establishing new LLCs. What is the minimum requirements there?
So just like anything else, all of the different products are different, right? Every product is going to kind of have its own minimum criteria, right? The most basic of criteria is actually in equipment financing, right? So if you are a brand new business, you do have to be in the process of forming things. So like getting your LLC, potentially setting up a business checking account. They want to know that you're actually starting a business, not just an idea, right? But basically, if you can go get access to equipment financing. Now, what's interesting with equipment financing is it's any, as they call, business use or business purpose equipment, right? So you could be talking printers and computers and technology like phones, and all those systems and that go into that. You could be talking about furniture. Shoot, if you're in marketing like you could be talking about the podcast setup, right? The mics, the headsets, the chairs, even the stuff you got in the background, all the uplighting, right? All of this stuff is technically business use equipment. And that falls under the category where you can borrow money for that. Now, what's unique about it is it's just like buying a car. If I could give you a real life example, they're going to make you put a down payment down. Typical down payments on equipment financing are anywhere between 10 and 25%. And that is what usually makes or breaks those kind of true startups. There is, do they have access to a little bit of liquidity where they can then utilize the funding, right? Sometimes the business owner doesn't necessarily have that, or the prospective business owner, right? The person looking to start the business doesn't necessarily have that 10 or 25% to put down. And that's really the make or break with a lot of those equipment financing opportunities. And you do have to have pretty decent credit. Why I say decent is because it's got to be good, not great. Typically anywhere over 600, north of 600, you can start to look at equipment financing as a potential option. Then as far as like startups, again, just like somebody that was starting a business, you could look at the SBA. The SBA will allow somebody to start a business. The way that they'll do it, though, is there has to either be a property tied to it, or potentially you're buying a business, right, that's already up and running. You also have to have relevant industry experience. If not you, a key person on the team has to have relevant, industry experience who's going to run the business. A lot of times we see people use this if they're going to like transfer ownership from one generation to the next, right? So if, the parents owned a business and they want to pass it off to the son or their daughter, a lot of times they'll cash out using like an SBA loan, get access to a bunch of funding. The SBA loans over 10 or 25 years, so the payment's really cheap. They can, they can afford that in the business, and everybody's happy right now. Now the new ownership can take over, and they're in a great spot where they've leveraged an existing business to borrow money to now be the owner of that business. Outside of that, there really isn't many ways for somebody with no revenue in a business to borrow money. The next layer, though, would be right around that 3 to 6 months of you being in business, because lenders will start to give you money the second you start to see some consistency in being able to do some business, right? So typically what a lender is going to require, and this is more on the unsecured side. So they're going to require 3 to 6 months of your most recent business bank statements. And what they're looking for in there is, how does your cash flow move around within your business, right? What are your expenses? Where are you spending the money? What are your revenue avenues, and how are you making the money? And how much money are you keeping on hand? Because ultimately, that's how much you can afford in a payment. Right. So that's what they're going to look at first, is those businesses that are right around that brand new stage. I hate this term, but like, you can almost call it like a micro loan. Typically, those are going to be between like $5,000 and $25,000. And those lenders like to see at least $5,000 per month in transactions going through that business checking account. Right. So that's the most basic of requirements. Once you start to reach a year, 2 years in business, $100,000 plus annually in your business, in revenue, a lot of things start to open up for you where you can take advantage of all of the other products. And then it really just depends on, what are you doing with the capital? Right. Because once you have access to a bunch of different products, it's like, all right, well, now I can kind of pick and choose. Right. When you are getting started, you might just have one or two options. Once you are started and you are going, you might have 6 or 7. So it's important that you really understand, hey, this is what I'm doing with the money. This is how things should be structured. And this is the way that I'm going to take advantage of the lending that's available to me.
You know what I just thought about is, like, say you have a business that's been established for 2 or 3 years and they already have traditional bank financing. Do you ever see them come over to ROK Financial and do business?
Yeah, especially these days, Cal. A lot of banks have stopped commercial lending or paused you being able to access lines of credit. They've even called in those lines of credit if you're in some of these high restricted industries. We've seen it where we've had to come in and pay off the bank because the bank is no longer lending money to that type of business, right? So imagine that. Imagine being a business owner. You've kept all your accounts there, your payroll accounts, your savings and personal accounts, right? Your business checking account, and you've done all this business through your bank. They let you finally get access to some funding, and a couple months later they say, you know what, I know you have that 150K line that you pulled on, and you owe us 100,000. That's all going to be due on the 31st. Right. And that's what's happening, is because they can make changes like that. And it's because the lending isn't their core business. Right. And this is why traditional banks are so interesting, is their actual core business is not lending. Their core business is holding capital. Right. Their core business is investing your checking and savings and all of the deposit accounts that you have at the bank. What they do is they turn around and they invest that in real estate. They invest that into insurances, right? And that's where you're getting these rates of return from the bank. That's where a high yield savings account comes from, is they're making more money on it than they're giving to you. That's for sure. When it comes to banks then lending money, the way that banks lend money is it's really based on prime rate, and where the government kind of sets their cost of capital, right? The treasury sets their cost of capital, so that if the big banks had to go borrow money, it's going to cost them a point, 2 points, maybe 3%, right? They have their own cost of capital. Now, our lenders, they get their money and their lines of credit from traditional banks, right? So even if they were to pass along and not make any money, they still can't give you money for free, right? Banks still can't give you money for free. Nobody gives out money for free. The government can, because they print it, right? But look what happened with that. Now you're paying for it in inflation, right? That's how that works. They give you free money one year, and a couple of years later, that inflation is going to kick up because all that free money that they boosted the economy with, right? Boosted. But no, it's one of those things where, like, listen, I'm not political. I'm not like I'm more of just a realist, if I'm being honest. Like, I went to school for finance. I have a degree in finance. I remember sitting in a lot of classes and learning what they were teaching us, and those were the things that they would tell you and talk about, was like, hey, if you do something, there's cause and effect in the economy. If you're the government and you say or do up or down on rates, on costs, like, all of that has ripple effects throughout every industry, right? And the whiplash effect happens to small business owners. And that's what I've learned from being in this industry is, when you talk about the Fed and their rates and what is, Jamie Dimon, the CEO of Chase, what does he think about all of these changes? Well, they're able to give you knee-jerk reactions right at the beginning of these things because they're seeing immediate cause and effect. When a business owner is talking about, hey, how has inflation affected my business from the money that was put into the economy a couple years ago? Well, there could be positive or negatives, but I can tell you it took them a while to actually feel the results of that. And now is when they're looking to start to really alleviate themselves or solve these things that have come up, right? And again, it's almost like a lagging thing where like, hey, something's going to happen over here, but I'm not going to feel it till it's over here, right? Because again, it's got to go through the whole economy before the business owners on the small business side really feel it. And that's what's so interesting. Like, you look at statistics, right? 99.9% of businesses in our country are small businesses. 60% of our workforce is employed by small businesses. These are all real-time statistics. About 10% of our population is small business owners. There's 330 million people in the US, and there's 33.5 million small businesses, right? So these are all things that, like, when you really just look at it, the numbers don't lie, right? When you get men and women on TV and giving you these facts, as they call them, men lie, women lie, numbers don't. These are the things that are going to tell you, hey, this is where things are going. This is, it's not a forecast, right? Like we're not talking about the weather. We know what's coming. I can promise you. What changes those things is when they change what happens, right? Natural disasters happen, COVID happens, they pause the economy, right? Like those are things you can't predict, right? But like as far as what's going to happen in the next few months, if nothing changes, everybody can tell you what's going to happen. Inflation is going to continue to affect the hell out of small businesses and Americans alike. Like if you're one of those middle class people who most people are, or lower class as they call them, right? You're going to see this effect for a long time. It's not going to change right away, right? It's just it isn't. They're not going to change the rate. They've already talked about it. The Fed's not going to change the rate till at least into next year. And if that's the case, you're not going to see easing anywhere. And what's really happened, again, not to go too crazy with all this economist stuff, right? But what's really happened here is we've spent a lot of money in the past few years, and the rich have got richer. So they've taken that money and now they're investing it. You go look at BlackRock is one of the biggest investment firms in the world, right? They pledged something like a few $100 billion into single family real estate in the next 10 years. Right. So what does that mean? That means when you go to buy your first home, like I just did not all that long ago, you're competing against one of the biggest investment firms in the world. And trust me, they're coming in and buying cash. So like that's the reality of where we're at is like homes. People are going to continue to snatch those up because they're investments, right? People are going to continue to snatch up and drive up stocks, and things are going to continue to progress because there are people who have it and can continue to perpetuate it. Who's going to really feel it though are those that don't have it, that those that can't invest, that those that can't get ahead. And that's what's unfortunate here is, they don't know what is available to them so that they can start to get ahead or get back to, we started this with a unique topic of, people coming to us from the bank, but like we call it getting clients back to being bankable, right? Where if somebody does come to us because their credit score dropped or because they're not profitable this year in their business, they can still take advantage of funding. And then next year they claim profitability, or next year their credit is better because they paid down some trade lines and transferred some stuff over to the business, right? Like these are the things that we do to put the steps in place to get you back to borrowing money where it makes the most sense, right? And again, we don't believe that we're a solution for everybody all the time, right? What we do believe is that if you don't have a solution, allow us to step in and help, because a lot of times we're able to fill the gaps, right? So like if you have a relationship at your local bank and you can go get a couple $100,000, do it. Or even if it's 20 grand, go get it. If you need extra capital, or if you need you need something outside of the bank, think of us, because that's the part of the market that we're in and where we're going to provide the most value anyway.
So if I'm a small business owner, I come to you, is it going to be a soft credit pull? Is it going to be a hard credit pull? Do I need to use a personal guarantee, or is there no credit check at all? How does that work?
So this is a great question. And what I would say is, if you're a small business owner and you have concerns with anything, voice them early, because lending and underwriting and all of these different products, they're pretty black and white, right? You either check the boxes or you don't. And if you don't check certain boxes, you're not going to qualify. That's just the nature of lending. But what's interesting about ROK and where we are in the marketplace is we kind of play in the gray. And what I mean by that is, there's certain lenders on our platform that, just like you said, no personal guarantee, no credit check. What they're doing is they're leveraging your business, and they're looking at your business. They might look at your business credit, but they're not going to look at your personal credit. They're not going to tie to your personal credit. That specific lender, you could be one day out of a bankruptcy, as long as it's been resolved and you're out of the bankruptcy. They'll lend to you tomorrow. Where if you were to go to a traditional bank, they're going to tell you can't borrow for 7 years, right? So there's a lot of flexibility in that. And we've had it in the past where, like, somebody's buying a house, right? So they can't have their credit affected. So they can't have hard pulls on their credit. So right away, you can't go get that person an SBA loan, because when you actually get SBA funding, one of the last things they do is a hard credit check. Right. So that would drop that person's score down. It would also show an extra inquiry. It would also be for financing. They would lose their mortgage. Right. We're savvy enough to know this stuff. It's important that you give us the information on the upfront, though, so that we can provide you with the path that makes the most sense. Right. So if you are concerned with those things, I would certainly talk about them. As far as like the personal guarantee goes, when you're talking about unsecured debt, a lot of times lenders do want a personal guarantee, or what's referred to as a performance guarantee. And it's got a funny way of being worded. Sometimes they call it a personal guarantee of performance, right? So like, this is where, you get all the people that are like, wait, this is still a personal guarantee. What it basically means is that you, as the owner, as the operator in the business, are not going to maliciously manipulate your business so that it doesn't perform and isn't able to pay back the payments. Basically, a lot of times when you have these types of things, is they're only for when you default on the loan, right? Because they're not going to notify like business lenders aren't going to show up on your personal credit other than maybe that credit check. But like, once your trade line is established, if they're putting it anywhere, it's going to be on your business credit. Right. So you won't have to worry about having, that $50,000 or $100,000 in debt on your personal credit report. Right. You won't have to worry about that trade line being on your personal credit report. Now, what you will have to worry about is, in the case of default, if you were to default, there's obviously going to be recourse based on what you signed and what the contract outlined. So again, it's really going to be based on that business owner. What are their I guess biggest concerns, or what are their biggest focal points when borrowing the money. What I will say, though, is a lot of times what we've found is, once somebody is approved for the funding, I don't want to say the personal guarantee or performance guarantee becomes a make or break thing. A lot of times what we actually see is the reverse, right? They're more willing to take on a personal guarantee or a performance guarantee or one of these different types of things, once they know, hey, I am approved and I'm literally signing the contract, right? So like, I get on the way in the door how scary some of that stuff can sound, but the idea is, like, we lend money to businesses that intend to pay it back. And when they intend to, right? Could you believe that? It's so crazy. It's like the opposite of what most people do, right? We lend money to businesses that we believe intend to pay it back, because we're looking for repeat customers. Like, if I'm being honest, right? Like, taking everything else out of it, like, we get paid when people borrow money through us. So if you are a customer and you aren't looking to pay the loan back, that's as bad on me as it is on you as a customer. So for us, we really, really try to make sure that, like, hey, we're funding solid businesses with a solid plan for their use of funds, and they're going to apply this funding so that they can either, grow, solve a challenge, but ultimately sustain their business, right? Because that's the most important part, is that, you can continue to collect the paycheck going forward, right? Like that's literally the most important part. So that's what we're focused on, is helping business owners sustain and take advantage of opportunities. I mean, shoot, you can go to our website, rock.biz, right? Our mission is going to say to help business owners generate perpetual opportunities through simple business financing. All that means is every time there's a need for capital, we want to help you understand what your options are and ultimately get you the best capital for your business, right? So that's the reason we show up here every day. It's why we have 100+ employees in our small business. We are a small business. James, who's our founder, he sits on the SBFA, which is the Small Business Finance Administration. They're broker counsel. So basically, if you are a broker in alternative finance, the SBFA and James and his specific role have been working with Congress and regulators and lobbyists to put regulation into alternative finance, because we firmly believe that, like, this is a resource that every business owner should know about, but there's also a very low barrier for entry. And when you talk about high cost money, a lot of people can go about it and get, and get screwed the wrong way, sorry for my language, but take money that doesn't make sense, right? I said before, dollars have to make sense, right? If they're taking money that doesn't make sense and using it for things that aren't really going to benefit them or their business, well, that's a recipe for disaster. And we just really try to educate business owners around, hey, this is where you should apply the funding. A lot of times when you talk about use of funds, right, you may have a business owner who's got a 580 credit score or a 570 credit score, some negatives on there, some blemishes, right? Maybe high utilization. So they're thinking, hey, you know what? Let me go borrow 50 grand from my business. I'll pay down my personal credit cards, and that'll make my credit score go up. Right. But what you have to understand is when you take on business financing, it's going to come at a cost. So what is that cost? And is that cost higher than what your credit cards are going to cost you? Because if the cost is higher than what the credit cards are going to cost you, keep paying the credit cards, because that's going to be less of a cost of capital to you. Right. So, like, a lot of times paying off personal credit card debt with like our types of financing does not make sense. What it does make sense to do is take 50 grand in your business, turn that 50 into 75, 85, 90, 100 grand, and then that extra 50K that you have right after paying back the loan, take that and pay down the credit cards. Right, use that money to pay down the debt, and use the money that you've made, right, the profit from borrowing, as the ability to take advantage of some of those things. And that's really the education piece, if I'm being honest, is just teaching business owners a bit about personal and commercial finance, and really how to balance the two. Because let's face it, a lot of times they're busy, working in the business and not so much on the business, right? As they say, our job is to help be that, that kind of focal point, and say, hey, this is where you've been, this is where you're at, this is what's available, and this is where you want to go. This is how you can get there. And it's their job to get in, turn on the engine and actually drive the vehicle, right? Like I said before, we'll pop the hood and do the diagnostics, but it's really going to be up to them to be the driver behind the wheel. I think that was a pretty good analogy.
Yeah. And I was going to say, I love that analogy there. Was that on the fly?
Yeah, it was. That was off the top.
One thing that my audience members are concerned about is building business credit. Do most of your products help you build that credit, like with the different exchanges?
Great question. As far as business credit goes, it's really interesting. Certain lenders are going to report to certain business credit bureaus, right? It's similar on the consumer side, but there's really a big three on the consumer side. When you talk about business credit, there's even more business credit bureaus than you could imagine. There's certain niche ones for specific industries, or this and that. As far as our lenders go, if they're going to report to business credit, a lot of times it's Experian or D&B, potentially what's the other one? I'm sorry, I'm drawing a blank.
Small Business Financial Exchange.
Yeah. There's a few of them that they're going to report to. But what's interesting about it is, like, business credit is one of those things where like you really got to pay a lot of attention to it, right? So if you're concerned with it, and you should be, it's another way for you to leverage your business as a business owner, right? You should build business credit. But at the same time, don't let that hold you up on what's the best product for you, right? You might have two options, right? And one might be a longer term with more money, but not report to business credit, right? Versus the option that has a little bit shorter of a term, a little bit less money, might actually report to business credit. So again, that's one of those things, just like I said before about, the PGs and stuff like that, is definitely voice that stuff on the upfront so that we can position you for a product potentially like that. But understand that like when we come and present you options, we're going to present the best options for you, and we're always going to show you our best hand, right? So sometimes that best hand might be missing what you thought was like a key. But again, does that just mean that, hey, this time I'm not leveraging the business credit? If I borrow again in 6, 12, or 18 months, I can make sure that at that time the product is tied to the business credit. You get what I'm saying? It's not necessarily a make or break thing for us. However, there are, I would say probably about half of our products and lenders are reporting to your business credit at this point, probably about 50%. You know, what's interesting about the business lenders who report things to either personal or business credit bureaus is they create competition for themselves, right? So this is where you end up with a ton of phone calls, a ton of people telling you, hey, I saw you applied for financing. Hey, I know you were looking for money for your business. Hey, I saw you applied, right? This is how that happens, is because there's brokers and banks and lenders out there that buy this information from those credit bureaus. And when you look to borrow money in your business, whether it's an SBA loan, a term loan, a line of credit, equipment financing, all of those have different categories within the credit bureaus and what type of triggers they are. And you can purchase this information. Like, that's how the credit bureaus make money. They sell your information. So just keep that in mind, right? Like, a lot of times we'll limit the amount of lenders we apply to simply because we don't want to create competition, for you in the marketplace. Like, a lot of times it's a very, it's a double-edged sword, as they call it, right? Where you definitely want to make sure you're casting a wide enough net to make sure that you have all the options. But at the same time, you want to be strategic enough to know, hey, I'm only going to send it to these few arenas, because the process itself, the more variables you put in place, the more things you have to worry about, right? Whereas if you only have 2, 3, 4 lenders, you really can understand, hey, what is their closing process? What do they need? If it's only a couple different products, again, same type of thing. It just allows for a more streamlined experience and process. So again, about 50% of our lenders and products, I would say at this point, are reporting to your payment history to a business credit bureau. Now, last part to this is, every lender, when they do lend you money, you need to think of them as their own business credit bureau, because as long as you make on-time payments, and you're fulfilling your end of the bargain, most lenders, what they're going to look to do is give you better terms, or more money, or potentially extend your term, or give you cheaper rates, as they know your business more and more, right? The first time you borrow from a lender, it's going to be their worst offer, right? Because again, they don't know you from a hole in the wall. So there is also that credit or credibility that you're building within the lending relationship. And that's what's unique about ROK, is we also have the ability to say to other lenders, if you were to come back to us and not necessarily, like, for example, let's say you were with a lender and their max funding amount was $500,000. Now you come to us and you need 750. Right. So now we can't go with the lender that you've been working with, but we have all this history that you have with them, right? You've worked with them 2 or 3 times, right? Or you borrowed from them once. We take that information and go share it with the other lenders that will give you 750K, and they don't view it as exactly the same as it being on their own paper. But a lot of times they'll take our word for, hey, this is a repeat customer who pays on time, and that establishes a relationship for you before you've even done that for yourself. So again, there's power in aligning yourself with the right lenders and the right people to help you get to those lenders, because that's what's going to allow you to kind of take those steps, whether it's back to being bankable or purchase your building or whatever our ultimate goal is. That's how you're going to do it, is through leveraging those lending relationships.
Okay. I want to talk about preferred industries and restricted industries. What can you tell me about that?
Oh man, this is a curveball that I'm going to knock out of the park. No, so what's interesting, right, is restricted industries, right? The two biggest industries that we're seeing traditional banks and lenders limit the most right now are like general contracting, construction, right? Construction is a big one, and trucking and transportation. These are two industries that are literally getting decimated by banks and lenders. Some of them aren't doing them at all. Some of them have such high requirements that 95% of business owners aren't even able to access it. And others that are servicing the market are super high risk lenders. So they're not offering very much. They're not offering very long terms, or, it's not favorable terms on what you're borrowing, right? Now, those are probably the highestly restricted industries. Those are also our two biggest industries in terms of the amount of business that we fund. Look, that one got your attention. I told you I was going to knock this one out of the park, right? No, so what you should understand about ROK Financial is we're very good at helping when banks say no. Right. So again, the people that we're going to do the most business with and have the most demand from, right, the supply and demand kind of conversation, is the ones that are most restricted everywhere else, right? Because nobody can find them a home. Now, we're very good at finding those types of businesses a home, or getting them access to the capital that they're looking for. Now, that doesn't mean that we don't have preferred industries. The preferred industries that we work with that are getting home run approvals these days, right? I'm talking about terms that are above and beyond what anybody else is getting access to, are definitely at the top, are like medical, dental, vets, anybody in and around the healthcare industry, small surgical centers, home health care, like all of these different healthcare style industries are really crushing it, as I would say. And then, outside of the medical industry, where everybody wants to lend money to doctors, there's like tier 1A as far as like preferred industries go. And in there, you have what I would refer to as like transactional businesses, right? You have restaurants, retail, e-commerce businesses, auto repair and auto body shops, right? Where every day there's typically money coming in and out of the business. They're making and spending money. High transactional businesses always perform well in our industry because you can really see the money flow in and out, and typically there's either growth or sustained business going on, right? They're either increasing how much business is going on, or they're right around status quo. So those industries that are highly transactional. You also have like manufacturing is huge, right? You do have like a focus on that in our country at this point, where we've tried to pull in some manufacturing back. So manufacturing, wholesale distribution is also great types of industries for us. As far as like truly taboo, right, like outside of the box industries, you have like the cannabis space, right, or like the marijuana space, or like CBD. Like those are super duper tough deals to get done. What I will say is we've been funding in that industry since 2017. We know who's doing what. Again, that's not a deal you do every day. We're probably doing a handful of those a month at the most. But again, in those states where it is legal, we are able to help get you access to funding, equipment financing, even a line of credit, buy your building, all that type of stuff. So whether you are in one of these restricted or even further down the line industries, or a super duper core preferred industry, it doesn't really matter. What you're going to get from us is a very similar experience, where we're going to, like I said earlier, give you that quick little merchant interview where we're going to understand your business. We're going to take that information along with your documentation, go get you approvals, explain the ins and outs of those things to you as far as rates, terms, fees, all of that, so you can decide what's the best option for you. And then we're just going to provide a stellar experience from that approval approval to funding, really just outlining, hey, this is what it's going to take to get that money into your business checking account, right? And that's really the system. It doesn't matter to us what industry you're in. What I will say is that's what's going to matter to the lenders, right? And it's not it's that's again one of those things that's definitely a moving target, right? I've seen it in the past where construction and transportation during during COVID, like, and right after COVID, those were the best industries, because again, everything else had been shut down for months, right? So like, trucking, construction, those were things that were still going on. Obviously, medical and healthcare then was also still a big deal, right? Especially during a pandemic, they're making lots of money, but like, these are cyclical things, right? I don't know what 6 or 12 months is going to hold when you're talking about these industries. What I can tell you is what the picture looks like right now, and that's a pretty vivid one.
Okay. I want to know about if I'm a small business owner and I go to the website, I go to ROK Financial and I put in my information. What is like a high level view from start to finish of how that process works?
So it would depend on when you applied, right? If it's during business hours, you're probably going to hear from us pretty quickly. Maybe 15 minutes to like an hour, you'll hear from somebody, like a real person. Anytime you complete like a form or an application through us, you're going to hear something instantly. You're always going to get like a confirmation email or text message to your phone. We're big into data security right now. So there's a lot going on when you talk about finance or people's information, especially with all the hacking and things that go on. So we're very in tune with information and people's data. So you get actually a what we call a ROK security code, and it gets text message to you. And basically, if at any point throughout the process you feel you're being contacted by somebody who might not be us or is pretending to be us, at any point, any person that you're talking to from our team, you can just say, "Hey, can you verify my ROK security code?" And we'll be able to give that to you over the phone, right? Because again, it's going to be in big red numbers on your accounts on our system. But again, that's something you can't get access to unless you have our system or you have that text message, right? Like those are the only two ways that happens. So it's one way for you to understand that your information is being protected. We're super duper focused on that. So all of our lending relationships, we're API'd with all of our lenders. So basically we take your documentation, whether it's bank statements, your application, maybe a tax return or any other documents that are required, and we run it through our software. And basically that software is going to aggregate or pull out all the relevant information that we need to share with our lenders and automatically put that into our lenders' systems, right? So it's a system that's set up that pushes that information automatically. And then excuse me, on their end, a lot of times we're set up for instant or pretty quick approval, right? What I mean by pretty quick is typically if you don't approve our deal in 2 hours, we're moving on. So we're looking for response times very, very quick from our lenders. So once you've submitted your documentation to us, we typically tell you you're going to hear from us in the next day or so, just to give us a chance to let all the lenders come back with all of their options. And then again, we're going to jump back on the phone, explain those options to you, let you play around with the calculator, and you tell us what's next, right? Hey, this looks good. I want to move forward with X amount of dollars. You click, the green button of move forward on your calculator. And depending on like what that offer is that you chose, it's going to pull in that lender and what the requirements are to get that deal closed, right? So again, we may have 3 or 4 different lenders and offers that are blended in that. Whatever dollar amount you pick and choose is what will prompt you to move forward in those steps. Typical turnaround time for us is like 3 to 5 business days. In terms of getting somebody from application to approval and approval to funding, is like 3 to 5 business days, and general consensus on getting somebody just numbers to look at like an approval is like 12 to 24 hours. And that's pretty much where we stick. If you're somebody that does need to move same day, we can fund you as quickly as same day. We have lenders on the West Coast that if you're on the East Coast, it allows us to be much more flexible with. We also have lenders that have like online checkout, where you can literally just get approved, during the day and then apply, pull your funding whenever. It could be a weekend, it could be a Sunday. It doesn't really matter. You won't get the funding until the next bank day, but you can take that draw on that account. It really depends on what that need is for the business owner. I would say, Cal, we move at the pace of the business owner, man. If they need us to move quickly, we're a part of your team. Just pass that baton and we'll run our leg of the race. But if you are somebody that hey, I'm putting together my options. I need funding for September 1st, right? Or the first of next month or the month after that, whatever it is, right? We can certainly abide by your timeline.
Okay. I wanted to go to another place with this and ask about this is debt financing, right?
For sure.
How do you feel about debt financing versus equity financing versus I'm just going to save the money up or I'm just going to ask friends and family? What do you think?
So this goes back to really your belief about money, if I'm being honest, right? No business owner keeps 100% of their profit anyway. Right? Everybody's coming for their piece, whether it's Uncle Sam, your employees, the expenses, right? Most people don't realize like the business owners, they're facing the most costs, right? So you're not necessarily ever going to, keep 100% of your profits. Now, when you're talking about investing versus debt, I once heard, somebody in our industry, much smarter than I am. They put it like, hey, we're like investors that are here when you need us and gone when you don't. Right. Is it going to cost you money? Absolutely. But at the same time, once you've paid that off, you're reaping the benefits of gaining access to the capital, right? So let me give you an example. If you were to take on $100,000 for 10% of your business, well, every time that you were profit sharing or revenue sharing, they're taking their 10% right off the top, right? Forever, perpetuity. That's as long as your business is in business, they're taking their 10%. And potentially even other businesses, depending on how they structured their contract, right? That's a 10%, right? Like you might think, oh, that's not that bad, right? But that's forever. Right. So forever, you're going to be paying 10%. Let's say we gave you $100,000 and it cost you 50. Right. So now your 100,000 is going to cost you 150,000. Right. That's 50%. I'm not saying that's what it's going to cost, but let's say just because that's super aggressive, right? It's going to cost you 50%. Well, once you pay back that 150%, I mean, that 150,000, you're able to keep that capital in the business forever. Right. So let's use this example, right? Of the 100 and 150,000, you get access to the 100,000. Let's say you make $155,000 because again, dollars have to make sense. You have to make more money than it's going to cost you. So let's say you make $155,000 and you look at it like, damn, I'm really only going to make a 5% profit on borrowing this money. But what you don't remember is that once you've made all that money, you actually have $155,000 sitting there, right? So now all of that buying power that you had, all of that investment into the business has already been made. Now it's just about how can I continue this for perpetuity and continue to reap the benefits of having that capital in the business to begin with. I get it. It's going to cost you something. But at the end of the day, what cost really, really comes down to is what's the cost of doing nothing. Right? What's the cost of waiting? What's the cost of needing to put together those friends and family that are going to get you to, to the capital that you're looking for? A lot of times you can reach those numbers, but what does that do to those relationships if you're not able to pay them back? If you're, you know what I mean? Like, again, there's cost in everything. Right. But the most important thing is really understanding what's the cost of time and what is your time worth? Right. Because even if you were to apply with us and you look at us and go, you know what, that's super expensive. I can go get the money cheaper elsewhere. Well, what you're neglecting to remember is even if you could go beat us by 2, 3, or 5%, right? Let's say you could save 5%. Is that 5% worth how much time and effort it's going to take you to go find that next lender with that next approval and, also pull your credit and also have people calling you and, all of these things that are going to come along with you having to slow down your business to be able to take advantage of funding, right? Time is money. Business owners know that, I think nobody is savvier with the money in their pocket than a business owner, and that's why I leave it up to them. Right, we give them the options. We let them leverage those options into what works best for them and their business. And listen, sometimes it is smart enough to do nothing, and we'll do that. And then in 90 days, 6 months, shoot, even a year or two, when the capital makes more sense to take, we have people that re-engage with us all the time. Hey, I remember you were able to get me approved for 50K. If you can do the same, I'll take it again. Little did they know their business is 3 times the size. They're now approved for 150. Like, it happens all the time, Cal. I'll be honest. Like, there's so many business owners that like don't borrow from us the first time that they hear about us and are shown options. Plenty of times where we're re-engaging borrowers and lending to them 3, 6, 9 months, a year down the line.
This is called repeat business. Banks and lenders will start throwing more funding your way once you build a positive working relationship with them. I recently experienced this with Chase Bank. I had a Freedom Unlimited card on the personal side and an Ink Unlimited on the business side. A year later, I discovered Chase had already given me guaranteed approval for the Ink Cash card with a $13,000 starting limit. I'm sure that if I didn't start with those previous Chase cards, then they would never have extended the offer to me. So to see how I got approved for a $21,000 Chase Ink Unlimited card and earned the $1,000 bonus in less than a month, check out this video next, and thank you for watching.